After a sustained downtrend in the last 1.5 months, equity markets saw a sharp rebound in 3 of the last 4 sessions. The BSE Sensex and NSE Nifty indices are now up 3% each from their lowest levels in 4 months, made recently on October 26. A dovish US Federal Reserve, which has raised hopes that the rate hike cycle has come to an end, has led the recent turnaround. But how sustainable is this optimism? Analysts say the recovery is only temporary, as coming elections and the war in Gaza will keep markets subdued in the short term. Investors are also not fully factoring in the higher for longer rate view, they say.
I believe it is a temporary recovery. I firmly believe that in the short term, at least for another 2 to 3 months, the market will be highly volatile with a downward bias. One, global cues. Global markets are also highly volatile. They are confused. The markets are confused between economic recovery on the one hand and on the other hand slowdown. Rate hike may be over, but then my worry is that the rate hike already executed above 5% in the US, and most major economies still have a very high rate. I don't think these rates are going to come down significantly in the short term. So the damage from what is already done on the interest rate part, that market has to discount negatively in the short term.
Besides, crude oil has erased all gains sparked by the Israel-Hamas conflict. It is now down 13% in the last 5 weeks to $84. But experts note that this is in part due to a China slowdown, which is another risk for the global order. Going forward, a significant rebound for the market hinges on a pause in FPI outflows. The US 10-year Treasury yields have begun cooling from their multi-year high of 5%. If this continues, FPIs will likely halt their 2-month selling spree, boosting domestic stocks, said Apurva Seth of Samco Securities. From a technical perspective, the recent bullishness is largely due to a short covering after markets were oversold.
Until 19,850 levels aren't taken off, this move or this bounce has to be considered as a short covering move in nature or a bounce back. You can say within a medium term downtrend, only above the levels of 19,850 is where Nifty will negate low tops and low bottom formation. Else, until then, this can be just a bounce back or a sideways consolidation. On the downside, 19,000 is the immediate support, whereas on the upside, 19,500 to 19,700 are the likely targets.
Thus, it is too soon to cheer the recent gains on the Dalal Street, as the near-term outlook for equities remains downbeat. Today, on November 8, Q2 results of Lupin, Oil India, BHEL, MCX and Nazara Tech will be on the radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.